Hello viewers, welcome back to the series Bhaskar's Insurance for You and Me. Having discussed the cover details under motor insurance in the last few episodes, we will now take up few frequently asked questions on motor insurance. The first question we'll discuss is, what is the meaning and significance of sum insured under motor insurance policies? In insurance, the term sum insured refers to the maximum amount the insurer is liable to pay in case of a claim. As we have discussed, there are three different types of covers under different motor insurance policies: the third party liability cover, own damage cover, and personal accident cover wherever opted. So in respect of third party liability insurance section, the sum insured is referred as limit of liability, and it is unlimited for third party injuries, and it is rupees 7,50,000 in respect of third party property damages. You may refer to the discussion on these limits in our 23rd episode for further details. And in respect of personal accident cover, the sum insured per person is the amount opted by the insured while taking insurance from the available sum insured options as per applicable product. Coming to the own damage cover, the term IDV is used in place of sum insured. The IDV stands for insured's declared value, and the IDV represents the current market value of the vehicle. The term IDV actually means that the value of the vehicle insured is to be fixed and declared by the insured. The declared value is considered as sum insured under the OD section of the policy. This value is fixed at the commencement of the policy. It stays the same during the policy period, and it is subject to revision at the time of renewal. Though the IDV is declared by the insured, the policy specifies the method for determining the IDV. The IDV is calculated as the manufacturer's listed selling price less depreciation and the cost of accessories which are not included in the listed selling price, if there are any, less depreciation on those parts. The charges paid for registration, road tax, insurance, they are not part of IDV. The depreciation percentage applicable for vehicles up to an age of 5 years is fixed, and it is shown in the policy document itself in a table form under the head Schedule of Depreciation for arriving at IDV. So in case of vehicles more than 5 years of age, the depreciation is decided by the insurer and the insured mutually and is influenced by the vehicle condition also. It is important to know that the schedule of depreciation provides for a depreciation of 5% for vehicles whose age is not exceeding 6 months. So what it means is a new vehicle is also subject to depreciation, and it is subject to depreciation from day one, and the IDV is always less than the manufacturer's selling price. Another point to be kept in mind is the schedule of depreciation applicable for calculating the IDV of the vehicle should not be confused with the depreciation percentage applicable for arriving at claim payable in respect of parts replaced under partial losses. The policy document separately provides the depreciation percentages applicable for different types of parts and different ages of the vehicle. The next FAQ we will deal with is, what is the impact of IDV on claim settlement in motor insurance? Under motor policies, the claims can be of two types. One is the partial losses, where the damages suffered by the insured motor vehicle are repairable and the loss is not considered a constructive total loss. So what is constructive total loss? A constructive total loss means a loss where the cost of repair or retrieval of the vehicle is more than 75% of the IDV. In partial loss claims, the amount payable is the actual and reasonable cost of repair and replacement of parts lost or damaged. The replacement cost of the damaged part is subject to depreciation applicable for the affected part. The second type of loss is a total loss and constructive total loss, where either the vehicle is stolen or the vehicle is damaged beyond repairs or the repair cost of damage is more than 75% of the IDV of the vehicle. So in such total loss or constructive total loss cases, the claim amount payable is equal to the IDV which was declared and specified in the policy. The cost of wreck or salvage, if any, is either reduced from the claim amount or taken over by the insurer. Now, as explained, IDV is expected to be equal to the current market value of the vehicle. So what happens if the IDV is not equal to the current market value and it is declared higher or lower? In case the IDV is declared is lower than the current market value, there will be some saving in premium and there will be no direct impact on the partial losses. However, in case of total loss or constructive total loss, the insured will be paid only IDV, and this being less than the market value, the insured ends up getting lesser compensation than the market value. For example, let us assume current market value of a vehicle is 4 lakhs and the IDV declared for insurance is only 3 lakhs. In a particular claim scenario, which is a partial loss, if the repair cost is rupees 50,000 rupees, it is fully paid after adjusting depreciation and salvage of parts. There is no loss to the insured due to declaration of lower IDV. In a second claim scenario where it is a total loss, the insurer pays IDV of rupees 3 lakh less value of wreckage, though market value is rupees 4 lakhs. So the loss suffered by the insured is due to under declaration of IDV. Hence, the under declaration of IDV should be avoided. In case the IDV declared is higher than the market value, the premium payable will be higher, and also such high values for IDV may not be acceptable to the insurer. While the insurers allow some deviation of IDV from the market value, generally to the extent of around 10%, major deviations are not acceptable by the insurers. Hence, it is practically not possible to declare very high IDVs without valid justification and acceptance from insurers. So the next FAQ we'll look at is, what is the meaning of NIL depreciation cover? We have already seen that the value for which the motor vehicles are insured is IDV, which is nothing but the manufacturer's selling price less depreciation. As a result, the partial loss settlements for accidental damages are done after adjustment of depreciation only. The claim amount receivable from the insurer is reduced to the extent of depreciation from the cost of repairs. The chargeable depreciation is as per the percentages specified in the policy document, depending on the type of material of the part, that is plastic part or fiberglass or glass, etc., and the age of the vehicle. If any insured would like to avoid bearing this kind of a depreciation amount from his own pocket, he or she can opt for certain additional cover in the policy, which is known as nil depreciation cover or zero depreciation cover or bumper to bumper cover. Under this add-on, the partial loss claims are settled without deducting the depreciation. Some features of this nil depreciation cover are, this cover is provided as an add-on cover on the motor policy at the option of insured on payment of additional premium, and this is available for private car and two-wheeler classes of vehicles only. The insurer offers this cover only if the vehicle is less than a certain age, generally 5 years or 7 years, depending on the insurer or the product. And as depreciation is only applicable on own damage section, this add-on cover is not applicable for liability only policies. The number of claims that are allowed on nil depreciation basis during a policy period is generally limited, and the actual number varies from insurer to insurer. It is important to note that this add-on cover impacts only the method of settlement of partial loss claims. It does not change the basis of IDV. So if one opts for this add-on cover, the partial loss claims are settled without deduction of depreciation. It will not impact the claim settlement in case of total loss or constructive total loss or theft claims. The next frequent question that comes to mind is, what is no claim bonus in motor insurance policies? What is the impact of a claim on the NCB? Is NCB, that is no claim bonus, applicable for liability premium, etc.? So the no claim bonus is a discount given by insurance companies to insureds when there are no claims made under the policy. It's actually a reward for safe driving and responsible ownership of the vehicle. As a result, the NCB follows the fortunes of the original owner of the vehicle. In other words, the discount is for the owner and not on the vehicle. So NCB is allowed for all classes of motor vehicles except motor vehicles covered under motor trade policies. The NCB is earned only on the own damage portion of the premium. The insured becomes entitled for the no claim bonus at the renewal of the policy after expiry of full duration of 12 months of the policy. In case the renewal is not continuous with policy expiry, NCB entitlement continues if the renewal of the policy is done within 90 days of the policy expiry date. The discount, that is no claim bonus, it ranges from 20% to 50% depending on the number of consecutive claim free years. For example, if there are no claims during the continuous one full year of insurance, a discount of 20% on own damage premium is allowed on renewal of the policy. Similarly, if there are no claims during a continuous 2 full years of insurance, the discount is 25%. As the NCB is earned by the owner of the vehicle and not the vehicle itself, where there is a transfer of ownership and policy from one insured to another, the NCB will not be transferred to the new owner. However, the NCB is transferred to the new owner if the custody and use of the vehicle passes on to the spouse or children or parents of the original owner due to death of the original owner. So, except in those circumstances, the NCB will not be transferred to the new owner. Uh, if the owner of the vehicle substitutes his or her vehicle with another vehicle of the same class, that is, for example, a private car is substituted by another private car, the NCB entitled by the owner can be passed on to the substituted vehicle. If the vehicle is sold and not substituted by another vehicle immediately, still the NCB can be carried forward and applied to another vehicle insurance if the insurance is effected within 3 years from the date of expiry of previous insurance. If there are any claims during the policy period, the insured loses the entitlement for NCB. So, irrespective of the NCB percentage being enjoyed by the insured, the NCB becomes zero on renewal after occurrence of a claim during the policy period, even if it is a single claim or multiple claims. Now, as we understood, the NCB is allowed only in respect of OD premium portion and not on liability premium. Some of the probable reasons for this are as follows. The TP insurance is a legally mandated insurance and discounts are generally not allowed in such mandatory insurances. The driving behavior of the insured plays a major role in contributing to the accidents, resulting in either vehicle damage or third-party losses or both. However, the magnitude of the liability losses are huge when compared to own damage losses and are based on external factors. Hence, the liability claims history is not treated as an entirely direct result of owner's driving behavior. This is perhaps the reason why NCB is not allowed on the liability premium. Further, the time taken for a liability claim to be reported and recognized is relatively longer, sometimes extending even beyond 6 months also when compared to the OD claims. As a result, the liability claims experience at the time of renewal may not be the ultimate claim experience, as TP claims can be reported later. So this can lead to practical administrative problems if NCB is needed to apply. There is also a reason for non-application of NCB for liability premium. So in this episode, we have discussed few FAQs on motor insurance policies. We will meet again in the next episode with few more important aspects about motor insurance. Till then, bye from Bhaskar.